Welcome, everybody, to Love and Relo, the voice of the relocation industry. I am your host, Ben Cross, and we've got a really cool show lined up for you today. We've got David Oltman here from Ineo, one of the foremost minds in relocation tax. And a lot of you have probably seen him. He's fantastic at making tax issues plain to us. So I'm excited to pick his brain about that and talk about some personal stuff as well. So as everybody kind of gets in and comes in and checks in, make sure you hit that like button, make sure you hit that applause button, and come on in, check in, let me know where you're at and what you are doing and what the weather is, and just kind of like let yourself be heard. Before we get started, though, David, I'm just going to ask you to pause one moment, and we are going to go ahead and recognize our sponsor. Our sponsor today is VIP Corporate Housing, is the partner you can trust to put the safety and security of your employees front and center of everything they do. In addition to providing some of the best accommodations in top locations, they've added extra cleaning measures and precautions to put your minds at ease so you can leave the worrying to them and focus on doing your best work. So very excited about that. Thank you so much to Brad over there at VIP. So David, welcome to the show. How you doing?
Good. Thank you.
And where in the world are you right now, David?
I am working from home right outside of Wilton, Connecticut.
Lovely. And for those of us who don't know the tri-state area, can you give us an idea of where Wilton, Connecticut is?
Sure. Wilton is in Fairfield County. I'd say we're about 30 minutes north of Stamford, Connecticut, and maybe 30 minutes south of Danbury, Connecticut, and probably another 45 minutes to the west of White Plains, New York. So White Plains, Stamford, Danbury, right in that area.
AKA like the relocation triangle.
Yeah, there's a lot of relocation companies in Wilton, Connecticut, Norwalk, Connecticut, Shelton, Connecticut. Definitely the triangle, that's for sure. The Platinum Mile, I think they call it.
What do they call it?
The Platinum Mile. The Platinum Mile.
It's funny because we always say, nobody grew up to be in relocation, and you don't go to school for relocation. But I always thought if there was a relocation major in college, it would be at a college in that area, whether it be like a UConn or something like maybe Fairfield or something like that.
I couldn't agree more. There are literally thousands of employees employed in the Fairfield County, Westchester County area. You go to a movie theaters when they used to be open. You always run into countless people who are in the relocation industry because there's so many third-party companies who employ hundreds and hundreds, if not thousands, of people in this area.
It's funny story real quick. In Chappaqua, I went to the movies up in Chappaqua on 9A there, what used to be the brand new movie theater. And I actually ran into Bill Clinton and Chelsea Clinton. And I ran into Bill at the Bolt candy stand when I was in high school. So you never know who you're going to run into in Westchester.
Exactly.
Let's see. We got folks checking in here. This is awesome. Come on, check in. Leave a comment. I want to know you're out there. Hit that like button. Hit the heart button for David here. Show him that you love him. Let's get involved. Be heard here. Let me know where you're at as well. Michael Quigley, Ben, you are a machine every day. Yeah, about the only thing in my life I have stamina with is Love and Relo. So I'm trying to do it for you, Michael. Dan Croft, my dad, checking in. Dad's getting real punctual. I love it. The trick is with my dad, though, he comes in, he drops a comment early, and then he checks out. He never knows what happens afterwards. He just checks the box. I love it. Chris Lagerman, hi, guys. Happy to see David. Good to see you too, Chris. Looks like a new LinkedIn photo. Looking sharp, buddy. Let's see. Hi, Ben and David, watching from the country that loves taxes, Germany. Oh, gosh, that's great. Sandra Clary checking in from Northern Virginia. Hey, Sandra. It's good to see you. Let's see, Mena checking in from Dubai. Hi, David and Ben from Dubai, from one of the hottest countries in the world. Oh, I can't imagine. I hear, and then the people that work out there get ready for like, large events and stuff. Mena Elsfer, Sandra Claire. Hey, Sandra, how are you? People are chatting. That's awesome. Lynn Greenberg. Hi, guys from New York. Was a former message compliance teammate at Bloomberg. Oh, cool. Let's see here. I'm going to checking in. Hosea Botley from Seattle. Good to see you. Brian Rivers, First Tech from the West Coast, checking in. That's awesome. So that's cool. So people, hey, if you have any tax questions, I also want to hear them. Ask David here as we're getting started. Leave them below. I'm just going to throw that down there and invite everybody. We do have a cool audience poll as well. I'm going to put the audience poll on early, David, and then we're going to hop into questions. This way, the audience can actually start to answer the question. So the audience poll for today is: what percentage up or down are you expecting your assignment population to be in 2021? So not 2020, which is kind of crazy and undulating. And Bill Grable described it as the best quarter they ever had in Q1 and the worst quarter they ever had in Q2. Are you hearing a little bit of that same stuff, David?
Yes, I am. Exactly. Bill said it well.
Yeah. I hadn't heard it said like that before, but it described it so aptly. And so, but let's talk about 2021. Let's talk about the next year, the year ahead. David, really quick, why don't you weigh in on the audience poll as well? What are you seeing? What are you expecting assignment population to be like?
Well, it's interesting. We're fortunate. Our company has a lot of pharmaceutical companies as clients, and they're actually moving more people than ever, obviously trying to come up with a vaccine. But some of our other clients, obviously, their volume is really low. So we're seeing a mixed bag. Some companies are up, some companies are down. But we are, to our pleasant surprise and amazement, we are seeing companies still moving people, which is really a cool thing. We're lucky. We have what's called a counter with our software, and it shows us how many people authorize a move every day. And again, to our very happy and pleasant surprise, companies are initiating new moves every single day. So we're very encouraged by that.
So you bring up a great point, and you're probably in a unique position to actually have this data of any company out there. But I always thought it'd be so cool to have a relocation index to say, like, year over year, longitudinally looking back. We say things are down, we say things are up, but I've always seen it kind of anecdotal, and looking back, I would love to see what relocation volumes for the month of May have looked like for the last 10 years. Do you guys ever produce any data like that?
It's interesting you say that. I'm going to go way back, but in 2000, Mobility Magazine actually gave us the article of the year, and we did exactly what you're describing, month by month, year by year, how many people actually moved. And it probably took us a year to write that article, and we were happy to be recognized and acknowledged by Mobility Magazine getting the article of the year. But we actually displayed all those numbers and metrics back in 2000. We haven't done it since because it was literally a significant amount of work. But back then, we did have those numbers at our fingertips. It was very interesting.
Yeah, I feel like it would be a lot of work getting up to like current, but then each month it might be something simple that could be pushed out. But I just think that'd be so fascinating instead of us kind of going around and just like, what do you think? What do you think? I mean,
yeah.
Might make my show shorter, but it would be good. Michael Smith has a question. David, are those shipments are those moves, those relocations that you're talking about it being initiated, are those domestic or international assignments?
Right now, everything I'm commenting on are mainly domestic assignments. We're fortunate. We have a couple thousand different companies who use our technology, and every time a move is initiated or authorized, we actually see that. But so what I'm discussing is domestically. We do have some international, but I'm not, the international, the number is much smaller than it is U.S. domestic. But great question. Excellent.
Yeah, I think a lot of people suspect that too. Yeah, somebody brought up the fact that people may not even want to come over to the United States or depart from the United States, or accept people from the United States because the United States is such a hotbed right now still for coronavirus. So
yes, agreed.
We don't think of ourselves as a less than desirable destination or origin here in the U.S., but I think we might find ourselves in one of those moments right now in history. Gary checking in from Home Services. Jamie Masser, hi guys, cheers from sunny South Haven, Mississippi. Thanks for the weather, Jamie, appreciate you. Sylvia Ehrlich, hi David, so nice to see you with the little heart, I love it. Mena actually asked a question, and she's in Dubai. Do you believe that some countries will impose taxes for those who are working remotely abroad from their home country?
That's a great question. We actually see that the term that's used is nexus, and we actually see more and more companies trying to tax you for working from home. So the answer is absolutely yes. The countries are getting more and more aggressive on trying to create revenue and collect revenue. So yes, 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 working from home, we do see taxes being withheld.
Awesome. And we actually have another question. Now, I've had a few folks from RMCs actually send me some questions for you, David. They all want free advice. So you might have to bill and post for this stuff. Jason Rollins, hello, Ben and David, Express Corporate Housing checking in. Looking forward to learning. Before we get into some of like the tax stuff, which I promised everybody, some people will say, "Hey Ben, I want more relo stuff. Less love, more relo," you know. But before we hop into the hardcore tax stuff, I always like to really get to know people as people and understand kind of their journey and understand what makes them tick and understand some of the moments in their life that were special. And as I've kind of read some of the notes on our talk here, one of the recurring themes was basketball. What is basketball? What is basketball about for you?
Yeah, I've always loved basketball. Loved it just completely. Always had a basketball hoop at my house. And Ben, you brought back a memory. I was very fortunate. Bill and Hillary Clinton almost bought our house. And one of the most memorable events of Bill and Hillary Clinton went to our basketball court at our house and actually shot baskets. So wow. It's funny. So I can actually say Bill Clinton made a basket on this basketball hoop. So that was kind of a cool thing. And then my son, I've always loved Villanova basketball. Raleigh Massimino, 1985, winning the national championship. And by total luck, he went to Villanova. And the first year he was there, Villanova Wildcats won the national basketball championship. The next year, they didn't win, but then the following year they won again. So my son was very lucky to be at a college that 2 out of the first 3 years he attended, they actually won the national basketball championship. So
that's incredible.
Between Bill Clinton and basketball, definitely I enjoy basketball, especially college basketball.
So my stepbrother went to Nova also in the late 80s, early 90s. So that's interesting. That's cool. We got the Nova thread, and then Nova's had some great teams lately as well.
They have. I, in fact, had this year not been canceled, I would be rooting again for Villanova in my Final 64 basketball.
Yeah, Jay Wright's an awesome coach.
Jay Wright is doing good from Bucknell University.
Awesome. So I want to get into some tax stuff here, and I want to ask some questions. I'm trying to figure out where I want to start, but let me just ask it to you kind of broadly, David, and help us kind of establish the landscape here from a transferee standpoint, from an individual's standpoint. What are some of the most pressing tax issues affecting relocating individuals?
Sure. And I'll just start with this morning. All I have to do is just think what I did an hour before this phone call. Mm-hmm. Companies are very sensitive that any single employee who earns between $75,000 and $98,000, they should be getting one of those $1,200 checks in the mail. They're called the stimulus checks. And the magic number for married people are between $150 and $198. And we obviously know lots and lots of married people who make between $150 and $198,000. And quite frankly, there's a lot of single people who make in that $75,000 to $98,000 range too. With that said, just this morning, countless companies sent me lists of hundreds and hundreds of transferees who fell into those demographic categories. And they're concerned that their employees, because they moved in 2019 and the company added $20, $30, $40, $50, $100,000 to their W-2, they lost that stimulus check. To date, countless companies have reimbursed their 2019 transferees for $12,000, $1,200 for single, $2,400 for married. But if you have children under 17, it's another $500. So an average family that's got 2 kids under 17, that's a $3,400 check they would have received had they not relocated in tax year 2019. So more and more companies are sensitive to these issues. They're working with their relocation management companies, and they're trying to calculate how much extra money that having taxable income added to their W-2 costs them in not getting that stimulus, and companies are stepping up to the plate and trying to reimburse their employees for either that $1,200, $2,400, $3,400 if you've got kids, stimulus amounts that they lost, all because they just happened to relocate last year in 2019.
That's a fantastic point. What percentage of companies would you say are stepping up to the plate, so to speak, and actually taking care of that stimulus payment?
I'd say, just based on my own working with companies, I'm going to say at least 35% of companies have reached out to myself, acknowledging that, hey, their transferees have been calling them saying, I didn't get my stimulus check. I'd like it, and then the company goes, well, you're not going to get it because we added 50 grand to your W-2 last year. And then the company's giving them that extra $1,200. So I'm going to guess 30 to 35%.
Now, if I compare that 30 to 35% to the percentage of companies who are grossing up in general, what would you put the percentage of companies that are grossing up in general?
Definitely north of 90, 95%. Every company grosses up 90, 95% easy.
So then do you think that these companies are choosing to pay that stimulus that they didn't receive, the employee didn't receive, it kind of when asked, or are they being proactive about that?
Great question. The 30 to 35% are being very proactive. They are working with their relocation management companies. They're identifying the people who move, those single people in that $75,000 to $98,000, $99,000 area, those married people in the $150,000 to $199,000 area. They're being proactive. I do believe the other 65% of companies is if an employee brings it to their attention one-off, they will most likely address that.
So that's really then that really becomes the job of the transferee to be their own advocate and actually be aware that this is even a possibility.
Definitely.
Yeah. So then let me take it out from the transferee level instead and look at it on the corporate side now. What are some of the most pressing tax issues that corporations who relocate folks are facing right now?
Sure. Without question, aside from the stimulus, the hottest corporate tax issue is Section 139 of the tax code, the disaster relief part of the bill. Typically when there's been a hurricane, a weather event, the government's declared a national disaster, making certain expenses when reimbursed by a company not taxable. Back in March, the federal government declared the pandemic a national disaster. And because of that, companies are now allowed to treat many expenses that typically would be taxable as not taxable. An example would be an employee was in a state or a country, and because of the pandemic, they canceled their airfare. So they needed to be in temporary housing for an extra 2 months. They needed to pay extra rent. They needed to buy extra food. They needed to just live. All those expenses typically are taxable. However, because of the pandemic and because of Section 139 of the tax code, the disaster relief section, all those reimbursed expenses can now be treated as tax-free business expenses, no tax impact to the transferee whatsoever. So really, really good news. There's not a day that goes by that I don't address these issues about the disaster, Section 139, for several hours every single day. In fact, as we've been speaking today, on my email, it already flashed up. I have a meeting next week on Monday with a major pharmaceutical company to talk exactly about this subject. They just requested it.
So what do companies need to do to get more educated about how to take advantage of these provisions? So, I mean, it's nice that you're mentioning this, and if I'm a company watching this, a corporate mobility person watching this, or perhaps I'm even an RMC that wants to, really be a strategic partner to my clients and bring this forward and let my clients know that this is something they should really be talking about. What are some of the next steps that they can do to start to engage on this?
Sure. I'm just so proud of our industry's relocation management companies. So many of them have proactively contacted their corporate clients, and they have reclassified expenses that back in March were coded as taxable. And because of the pandemic and the disaster relief section 139, they've reclassified that. So a lot of extra work by the RMCs doing the tax coding, but the beneficiary is the corporation. They are going to literally save tens of thousands, if not millions of dollars in taxes because their RMC was proactive and went back. So I am definitely seeing the relocation management companies really take the lead on this with their corporations. And again, saving their companies hundreds of thousands, if not millions of dollars in unneeded taxes. So our industry is doing a nice job in that area.
Speaking of doing a nice job, you're doing a great job, David. I'm enjoying hearing you talk about it. And so is everybody who's watching right now. Katie Linehan jumping in, such a great knowledge source. Hello, David. Let's see here. Patrice Kachulis, Hassan Relocation, Portland, Oregon. Thanks, Ben, for having David. He is stellar. Did you know stellar is a word that people use to describe you? I mean, that's something. That's pretty cool. Janet's all we need is love. And so I always like hearing the stories, and I do want to get to your story and talk a little bit about how we got here, you and I. But I love hearing the nuts and bolts stuff that people can do to actually add value in their organization. Not only do we need inspiration, but we also need sometimes an indication of how we can add value and what we can do as professionals to really be rock stars in our company. And so I think you're providing that right now, David. So thank you so much.
Thank you.
Molly Feldman checking in. Hello from rainy Jacksonville. Hey, Molly. Sherry Jenkins. Hello from AHI Corporate Housing. This is so interesting, isn't it, Sherry? Let's see. Beverly Bell. Thanks, David. Most insightful guest ever. Oh, you're already getting nominations. We're not even at the halfway mark. Well, Tom, you know what? Tune out now because I don't know if it gets any better than what he just said. All right. So just pack it in. Let's see here. We got some more comments coming in. Some people are venting about how hard it is to file for unemployment. Trying to receive the stimulus is ridiculous. I hear, it's so interesting because I'm on these driver forums and I'm on these small business forums, and the moving industry is comprised of so many people in small businesses, and even the relocation, industry is, right. And the stories I hear are so all over the place. Some people are like, they're like, oh, I'm never going to get my stimulus. And then one day a check shows up. I'm like, hey, I got my stimulus. Hey, that's pretty cool. I got my PPP. Hey, that's pretty cool. Do you guys get involved at all with stimulus payments to corporations and PPP and any of that kind of stuff?
We do. And what you described, Ben, is exactly what happens. A person will complain, I didn't get that darn check. And I said, check your bank statement. Yep, there's the ACH. It hit last night. So we definitely see that. And the same with the PPP. So many people applied. And again, they would moan, they didn't get it. And then all of a sudden, a couple of days later, hey, our PPP came in. Our payroll was covered through the end of June. So very good news. So we do get it, but we are seeing more and more people receive those payments, which is really good, a really, really good thing. Just kind of a tip on the stimulus checks, the people who aren't getting theirs, they're the people that always owe money every year. And because they always owe money in taxes, they've never provided the IRS with any of their banking information because they're always writing a check to the IRS. So because the IRS doesn't have their banking information, that's why they're mailing a check. And what's most recent is they've even stopped mailing checks to some people. They're sending them prepaid debit cards, a $1,200, $2,400 Visa prepaid card, MasterCard, that will allow people to spend that money immediately. They don't even have to go to the bank. They've got the card. They can go online and start shopping immediately.
Wow. I'm always, one of the people to complain about the government myself, but I got to tell you, I think they've been pretty responsive, all things considered, in getting this money out. I've been pretty impressed with how they've been able to logistically even handle it all.
One comment, it's just interesting as the parent of a recently graduated college senior, go Villanova.
Go Nova.
What's interesting is my son, like so many other parents of college graduates, they started their job in July or August. And regardless how much money they made, depending what their starting salary was, the chances of them making more than, $98,000 only working in August, September, October, and November of 2019 is very low. With that said, just about every college senior who graduated who got a job additionally got a $1,200 check. So these kids are like, the candy store is open. I got a $1,200 check. They've got full-time jobs. They're making good money. They've got salaries, but because they made under that $75,000 threshold, like I said, it's just extra money to them. And they're saying, we're doing our patriotic duty and we're going to go and spend it. We're going to
put it back in the economy, right?
Yeah. So it's just an interesting phenomenon. And then I happen to know some people who work at a Costco or a, Best Buy or Bob, various places. And they said, boy, those college kids come in and are online. They are buying big screen TVs and video games and lots of other things. So
well, you do kind of wonder. You're like, you get a stimulus check and you got a job and your pay hasn't been impacted. You kind of like, you feel kind of guilty almost. You're like, gosh, I know there's people out there really struggling right now. And you wonder, is it, and I guess if the purpose is to go out and buy a big screen and go out and put it back into the economy, I guess it does work. We got people checking in from Munich, from Noah Mobility. We've got Vinny Valverde, our guest from yesterday at Nike. Hey Vinny, what's up, buddy? Let's see, Eric Scorzelli, hello all. Donna Giovanni of Zonex. Hi, David and Ben from sunny Florida. David is the only person who can make taxes interesting. I've heard that about you on a half a dozen occasions leading up to this talk. That, oh, you got David Oltman? Oh, cool. He actually makes that tax stuff interesting. He actually says it in a way that I can understand it. Why do you think that, as a person who talks every day, myself, and this is a skill I'm trying to understand as well, what do you think it is about the way you present the information that takes a dry, convoluted subject like tax and makes it plain and interesting?
I guess I really owe it all to my background of having one of my first jobs out of college at a major corporation and being promoted through the mobility ranks and getting up to be director of a Ciba-Geigy Novartis Corporation, being assigned in Basel, Switzerland, being relocated countless times myself. So because I was in the trenches and had the opportunity to manage domestic and international programs at a very young age, I think that really helped me a lot.
Well, let's take it through, because I want to. This is a good segue into your mobility journey as well, right? So you ended up in Basel. How did that happen?
When you work for Ciba-Geigy Corporation in Westchester County, New York, the town is Dobbs Ferry, right south of White Plains, if you work at Ciba-Geigy, you're going to end up in Basel, Switzerland someday. So that's what they do. Ciba, I think, was founded in the early 1600s. Geigy's in the mid 1600s. Company's been around for 300-400 years. They are very Swiss, very German, high German actually. Sometimes they get you to Basel, and it's a great experience as a young person just graduating college. Really teaches you a lot. They did a great job of training all of their employees.
And at that point, were you in mobility or not yet at that point?
I had various jobs in human resources, benefits, tax qualified plans. I always had the tax side of it involved. The technology side, computers were coming into play more and more. And again, working at a company like a Ciba-Geigy with hundreds of thousands of employees, billions of dollars in sales, they trained their employees so well, and all I can do is thank them for everything I've learned. I really owe to Ciba-Geigy, and now it's Novartis Corporation. So
how did you get into, bring us kind of through that path and everything, and how did you get to where you are today in mobility?
Sure. When I was at Ciba-Geigy, they had an intrapreneurial program where they wanted the HR department to generate revenue. HR always cost the company money, and they wanted us to generate revenue. So they allowed me to program a software product. It was actually called Gross Up at the time. It was an Excel spreadsheet, and they allowed me to sell that product under the name of Ciba-Geigy to literally half the Fortune 500. So it generated a lot of money for Ciba-Geigy. And that was great. And then after a year, they said, okay, Dave, we'd like to move you to another area. And I'm like, time out. I kind of like this gross up stuff. Would you mind if I kind of go off on my own and try to sell this gross up stuff on my own? And they said, yes, but we still want you to stay back and manage our program, because they were happy with how I was managing their program. So they actually allowed me to start a company, was called the Hessel Group at the time, and sell the gross up software while still managing Ciba-Geigei's program. In fact, ERC was a little bit challenged because they used to have colored badges. And if you were a corporate person, you had one color badge. If you were a service provider, you had another color badge. And they never knew what color badge to give me, because I really was the director of domestic and international relocation at Ciba-Geigei Corporation, but I really was the head of a software company that sold gross up software. And it was an interesting thing back in the day. And then eventually, I stayed with Ciba-Geigei managing their program for many, many years, but the software side of the Hessel Group kept growing and growing. And I finally what happened is Ciba-Geigei got acquired by Novartis, and it was the perfect time to kind of gently leave Ciba-Geigei/Novartis and focus full time on the software and tax side at the Hessel Group and now Ineo Mobility.
Yeah, and so you had the Hessel Group, and then it became Ineo. What was that process like, if you don't mind sharing?
It was great. It just the evolution, the evolving of the company to be technology focused and tax focused. So it was just a great opportunity to, again, see our industry evolve.
Yeah. Let's see. We got some comments and questions coming in here as well. And we got some folks just blowing up here. This David Bortle guy is just commenting like crazy over here. Let's see here. Who else we got here? Let's see. Mena says, what I can see that some countries is supporting the entrepreneurs, freelance jobs. With this being said, can we see some tax exemptions for individuals and corporate in the near future?
My comment would be, I'm sure everyone will lobby for that, but time will tell. Time will tell. Will they actually be available? Time will tell on that one.
Okay. And Mena's in Dubai. And just to be clear, do you also consult on taxes globally?
We're very fortunate again at Ineo. We are in many, many, many different countries doing global tax calculations, tax returns, et cetera, et cetera, et cetera.
Yeah. Lena Rekdal checking in there. Hi there. Looking forward to this. Greetings from Sweden. Hi, Lena.
In fact, in Sweden, there's a company called Cerner. We've done probably 100 people who've recently relocated from the U.S. to Sweden to work for Cerner Corporation and all the great work that company is doing over there.
Awesome. Molly says David is a magician. He turns tax into fun. Let's see here. Always love hearing David talk tax. Scott Oltman. I don't know if he's partial or not. I don't know if we can trust his opinion. What's the relation between you and Scott there?
That would be my son.
Oh, that's great. That's cool. That's great. My dad checks in. Your son checks in.
There you go. We got it all covered.
Love. Go Nova, Sylvia.
Go Nova.
You should. Let's see here. So we have a question here from Patrice. What are your thoughts about home sale cost taxes being affected? Like whether loss on sale, gross up, employees needing to sell for less due to COVID might be tricky proving. That's a good point, right? I mean, so Patrice is here and she brings up employees needing to sell for less due to COVID. Is that an expense that might be part of that COVID disaster declaration exemption?
What an excellent question. My answer would be to be conservative, and I'd say no. In fact, if I had to argue it upon audit, I'd rather have the other side of that audit. But if a company wanted to be aggressive and wanted to document, because of COVID, the house that was worth $325,000 was only worth $280,000, and we had to have that person move, and it cost us, $45,000 more money. We're not going to treat that loss on sale as taxable. My advice to a client would be treat it as taxable. But if a client wanted to take a very aggressive position, you could argue it. Like I said, I'd rather be on the other side of that argument. But it's a thought. It's not crazy. I think it's something, to maybe discuss more internally with your corporate tax department and get comfortable with maybe that position. But to date, this is the famous line: the IRS has not issued guidance with regards to that question.
So in situations where the IRS has not issued guidance, how do you make a determination, or how do your clients make determinations?
Sure. Usually they rely on the person giving the advice on their years and years of, service, their expertise. And at the end of the day, it comes down to their opinion. And a lot comes down to the culture of the company. Some companies are very conservative. In fact, you could argue in our industry, third-party home sale costs, when you're selling the old home for many, many, many years, and I can go back to all the various cases that are, littered throughout our industry, the Azar nut case, and there are just so many, revenue ruling 92331. You could argue technically no one has ever definitively said old home sale costs are not taxable. What I can tell you, this is a fact, 99% of companies treat them as not taxable. And to the best of my knowledge, no company has ever found to be non-compliant. So based on that, I think that's why 99% of companies are comfortable working with a relocation management company, selling that old house as a non-taxable event. But if you ask me to prove it beyond a shadow of a doubt, provide IRS guidance, I could not do that. So it's really getting comfortable with your tax consultant's opinion and hearing from your tax consultant why they're rendering that opinion. I often tell people, again, for the 30 plus years I've been in the industry, I've never seen an audit on that issue. I've never seen anyone found to be non-compliant. But can I prove it? Absolutely not. The IRS has not issued specific guidance with regards to that question.
I love your answer just now. Everybody, if you're watching this right now, hit the applause button, hit the like button. I think that was phenomenal. This is great. This is really great. Thank you, John Zilka, for suggesting that we get more reload stuff on here because, man, I'll tell you what, learning is fun. I have another question here that somebody had sent me. And I think it's similar to something you talked about, but I want to hear, the question is phrased just a bit different. Are there tax implications for states in work from home scenarios versus headquarters scenarios? And I don't know if I phrased that right, but
no, you did, Ben. In fact, it all gets back to Nexus, and it's a very, very huge issue right now. Sales tax is a very big issue right now going through our country. More and more states are getting very aggressive on the sales tax issues. And it all comes down to Nexus regarding that question. Many people work in a certain state, but their company is headquartered in another state, and they may be on a webinar like this, many hours during the day. So while they may not physically leave their state, their webinar is being broadcast at their corporate headquarters, and they're virtually present in that state. And many states would like to tax that person for being virtually present there. It is an issue that keeps getting bigger and bigger every single day, every day. It's definitely an issue that's here today, and I think it's going to be more so in the future, especially with people learning they truly can work from home. I guess a good point just to know is the state you live in is always going to tax you. So the state you live in, you always pay tax where you live. With that said, you typically pay tax where you work. Now, the good news is the state where you live gives you a tax credit for taxes paid to a state where you worked. So you're always paying where you live, but you get a credit for taxes paid where you work. But generally speaking, you will have to pay taxes to the state that you work in. And if you're virtually present in this corporate headquarter state, there's a chance at some point they may want to tax you on that. So it's, I guess, as they say, stay tuned. It's definitely a huge issue.
Man, there's so much complexity around that. And I have an equally complex issue to ask you about also. Let's see here. Katie's checking in. How did they get that check if they were claimed? How did they get that check if they were claimed?
It's a great question. I know exactly where you're going. It's one of the most common ones I get. Unfortunately, if you were claimed as a dependent, typically on your parents' return, you won't get a check. But here's the good news. In 2020, hopefully the thought is you have a full-time job right now in 2020 and you earn a good income. Hopefully on your 2020 return, you're going to get that extra $1,200 check, assuming you're single. Again, I'm making an assumption. The person graduated college, they're single, they were on mom and dad's returns last year in 2019, but now in 2020, they're on just their own return. They're going to be able to collect that $1,200 check in tax year 2020. So that is definitely good news. In fact, that was the general conversation at my Memorial Day picnic that I attended in barbecue. That exact question.
That exact question. And do you ever provide advice to your clients on what to do with that stimulus money, such as Gary Connerly using his check to get more leather-bound books?
There you go. Or go to more Villanova basketball games.
Go to more Villanova basketball games. That's what you're plugging. There you go. Charles Beatty checking in here. Katie says, because finance is fun and David is an amazing speaker. That's great. That is wonderful. Let's see here. Vinny says, I remember my first ERC wearing the corporate colored badge. The salespeople loved it as they could spot us from across the hotel. And in Vinny's case, he welcomes the attention and the free drinks. So I think it works just fine for Vinny. That's great. Katie says, what does David see as the most pressing corporate tax question based on the pandemic?
It's definitely the Section 139 to disaster relief. That is the number one issue with companies right now. What expenses can we reclassify, go back to early March and, moving forward as associated with the pandemic? There's literally not tens of thousands, but millions of dollars that can be saved by corporate America by really working with their RMC and their tax provider in this area.
Love it. Millions of dollars always gets people's attention, right? Jamie Master, great info and passionate about it too. Yes, you are. Let's see here. Donna DiGiovanni, that's a great question. Patrice, people are so encouraging. Lori Allen. Hey, Lori, I ain't seen you in a while. Hope you're doing well. Gloria says, have you seen more corporations moving to BVO or GBO since the tax law changed to save on gross up of closing costs being reimbursed?
Absolutely. It just used to be, the amended value was kind of the safe way to go, but absolutely more companies are going the BVO, GBO route. Once again, the main driver is to save taxes. It's all about saving tax dollars.
Awesome.
In fact, just to mention that, because the tax rates are so high now, and most people know this, the formula for a gross up, it's very straightforward. It's simply the tax rate divided by 1 minus the tax rate. So if you're in the highest tax bracket, which is approximately 37%, and you're in a high tax state like a New Jersey, a New York, a California, an Oregon, one of those states that has a very high tax rate, let's just say 10%. So you've got roughly 37% federal, another 10% for the state, that gets you to 47. You have to throw in 2.35 for Medicare. That gets you over 49%. If you divide 49% divided by 1 minus 49%, you're going to get 99%. So a $10,000 reimbursement that is subject to gross up, you have to give them the $10,000, but then you have to gross them up $9,990. Now, if you're in the highest brackets in California, the gross up is actually 111%. So you can imagine just how many companies move people to California. A $100,000 move is an extra $111,000 in gross up. So that move is now a $211,000 move. The employee only spent $100,000, but you've got to gross up $211,000. And the biggest reason is household goods is now taxable. And in fact, that's really a big issue on the radar screen in our industry is trying to get household goods back to not being taxable. If somehow, some way that can happen, companies will save, once again, millions of dollars. But today, as of this second, because HHG is all taxable, many times the gross up is if not 100%, it can even be more. Huge issues this year.
What is the prospect of that happening where either some or all of the relocation taxability or including relocation benefits as income, gets repealed out of that bill? I mean, is that really going to happen?
I mean, I'm an optimist, so I would be cautiously optimistic, but I am a realist, and I am very much aware that employees who go on temporary assignments for the last 10 years, they've been trying to change the law to say if you're on a temporary assignment, certain expenses are not taxable, and even though it's passed the House, it's never made it through the Senate, or if it goes through the Senate, the House. Bottom line is there's been a bill in Congress that really would help our industry, and it hasn't passed for the last 10 years. This new bill on HHG, I wish it would pass. It would be unbelievably great news for our industry. Will it pass? I just don't know. I really could not predict it. I'm hopeful, but again, that's a tough one.
I was talking to Lynn Shotwell at Worldwide ERC a couple weeks ago, and I told her one of the things I liked about her background was her advocacy and things that she had done before on behalf of associations and industries. And we got cut off. We ran out of time before, we could get into what areas we think we could use some advocacy as an industry. And this to me seems like probably at the forefront, top one or two issues.
I agree 100%.
Yeah. So everybody, send Lynn an email if you got some time, and if you don't have any time, make some time to send Lynn an email about household goods being non-taxable. That'd be super. Just think a mover. Send an email. Let's see here. We have we got another LinkedIn user. Do you believe that in work home scenarios it would be possible into America or Europe having just a headquarters in one place? I guess for paycheck and taxes, it can really be complex, but not impossible.
It's definitely a goal, but the good news is every day more and more companies are popping up that have this skill set to be able to handle this. So I definitely see it. I do see it happening in the very near future.
Let's see here. Katie says, "What a fun picnic." She loves finance. She's just thinking about talking stimulus checks over a barbecue. Why not, right? Let's see here. Let's see. All right. Jason Miller says, "Hi guys. Great job, David. Since I'm a mortgage guy, I have a mortgage question. Just wondering, what is the most common question you get regarding mortgages from a corporate perspective?"
Great question. As you know, Jason, being in the mortgage business, the magic number used to be $1 million. Anything over $1 million was taxable. Anything under $1 million would typically be deductible. They changed the law a few years back to $750,000. The most common issue is so many corporate transferees who transfer to high cost areas like a California, like a New York, like a New Jersey, et cetera. Their mortgages are well in excess of $750,000. It's always a challenge for them to not gross up the first $750,000, but do gross up the amounts over $750,000 because the employee can't take a deduction for that. That's one of the areas why more and more companies are starting to pay for domestic U.S. tax preparation services, because it is just so darn complicated to do a U.S. domestic tax return because of the change in the mortgage law dropping down to $750,000. $1 million was a big number, but as Jason and everybody in the mortgage industry knows, a lot of corporate transferees need to get mortgages in excess of $750,000 to move into some of these high cost areas.
And I think you made this point at a regional I was at watching you for the first time a few years ago. And I think you made the point that oftentimes the tax preparation for a employee transferring between New Jersey and California, or New Jersey and Pennsylvania, even right over the border, is more complex than someone going from the U.S. to Germany.
Absolutely. We're fortunate. We do a lot of tax returns. Many times we can do a German or Italian or Swiss tax return for less money than it cost us to do that New Jersey, Pennsylvania, California move, because we've got 4 or 5 states involved and all those other issues, where, to be honest, a Swiss return or a German or an Italian tax return can be fairly straightforward. So it is very, very, very true.
Yeah. And I think, and you talked about some companies offering tax preparation for their transferees for domestic transfers. And yet, I mean, what would you say, how often do companies offer tax prep for domestic relocations versus international relocation?
I'd say it's almost similar to that other statistic I gave you about companies concerned about the stimulus. I'm going to say 30 to 35% of companies proactively pay for domestic tax prep, but then upon request, like the squeaky wheel gets attention, those companies will pay. But internationally, close to 99.9%. I'd be hard pressed to find one company that moved a person internationally and didn't pay to have their tax return prepared. But to me, the bigger issue for corporate America is international people who come into the US. They have one of the most complicated tax returns to fill out. If you're coming from anywhere in the world into the US, you have to typically do a non-resident tax return or a dual status tax return. And many times you have to prepare 3 different returns, 3 different ways, and make non-revocable elections. They're very, very complicated returns. Unfortunately, only 50% of companies are paying for those returns, and the other 50% are leaving employees on their own. I always feel bad when a person sends me a tax return and I look at it and I'm like, my goodness, you overpaid so much in taxes. And the company said, well, or the employee said his company didn't pay and they tried to do it themselves on TurboTax or something like that. And the bottom line is a transferee's tax return, between the mortgage issues, the multi-state issues, the multi-country issues, the dual status issues, they are very, very complicated. More and more companies are starting to reimburse their employee for that expense.
Yeah, I see whenever you say, it's a squeaky wheel issue, to me, that always is an opportunity for us as an industry to maybe bang the drum a little louder and educate, our HR business partners on, to your point, I mean, how it's harder to relocate from New Jersey to Pennsylvania from a tax standpoint, right over the river there, than it is to go to Germany. And I just think that's an education opportunity,
Well stated, Ben. Well stated.
Yeah. Thank you. I try. Every once in a while, I get a one-liner. Vinny says, always a huge aha moment when we explain the tax gross up amounts to our HR partners and leaders. Some of them are never aware of the additional tax costs for providing additional benefits and allowances. Yep. Awesome. Let's see here. We got some folks coming. Oh, and then I forgot. Oh, yeah. Here we go. Elena's got a great one for you. Elena has a fun question. All right, David, fun question. If you had a T-shirt to show the importance of tax compliance and global mobility, what would it say?
It would say gross up. It would just say gross up.
It would just say gross up. Just gross up. Don't forget it.
One of my enjoyable things in our industry is my license plate on my car has had gross up on it for many, 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 many years. And whenever I pull into a local meeting, the person always says, "Oh, I know the speaker's here today. I saw the gross up license plate in the parking lot." It's always fun having that gross up license plate, and then talking to non-accounting people saying, "What does gross up mean?" It's a great conversation starter.
So you're the OG of the gross up, but me and Tommy, shout out to Tommy Bailey, started a little podcast. We did 20 episodes, ended it this year earlier. We might have to bring a couple back, but we called it the gross up. Were you familiar with this? Did you hear about this at all?
Yeah, absolutely. It was very cool. Anytime I see the word gross up, I love it.
Yeah, we loved it too, and we're not even tax guys, so that's cool. So yeah, that's fun. That's awesome. Let's see. I got a question here, and I think you might have talked about this at that same event I was at, listening to you speak, and it was about business travelers and extended business travelers. Has that issue gotten any better? Is it just as complicated as it's ever been? Have we gotten better at handling this? What's the status of business travelers?
I am so glad you asked that question. When we do talk to our clients and we say, what do you forecast in 2021? Absolutely. The consensus is more EBTs, more extended business travelers, definitely different tax rules. And I've been encouraging all the RMCs to hang out your shingle and be EBT experts, because corporations need to hire RMCs to help them sell their houses, but boy, they need to hire RMCs to help them manage the expenses associated with an extended business traveler. Expenses need to be reimbursed. Some need to be coded as taxable. Some need to be coded as not taxable. If it extends over a year, then you've got to turn everything into taxable from the date the intent changes. But EBTs are absolutely the hottest issue. Aside from the pandemic tax issues and the stimulus, those will be around for a little while, but EBTs, I think, will be here well into the future. So thank you for bringing up EBTs, a very, very hot tax issue.
And that issue doesn't have a built-in sunset like
no.
the Tax Cuts and Jobs Act of 2017, which is supposed to sunset in a couple of years here, theoretically. And
no, well said. 2025 is the magic year for the sunset on all that. But EBTs, I see them going on forever. I mean, and it makes sense. Why move a person and spend hundreds of thousands of dollars to sell that house when you can just send them on an extended business assignment or a business trip for 2 or 3 years? So huge issue for our industry.
Yep. Here we go. I love when I get calls. Let's see here. So, we've got 5 minutes left, and I think, let's see, Elena's got, oh, here we go. Elena's got the Gross Up t-shirt. She's a fan. Hey, is this in your wheelhouse? How can we run away from income tax in the United States?
Oh, move to Florida.
There you go. Elena Anderson DeLay says 1040 NRs and FBAR returns are such a headache for international employees. Have you experienced that?
Absolutely. In fact, just announced today by the IRS a few hours ago, a 1040X, which is an amended tax return. In fact, this year, I've seen more W-2Cs issued by RMCs than ever before. For whatever reason, tax year 2019 was a challenge for a lot of our big relocation management companies, hence the need to issue a W-2C. When you get a W-2C as a taxpayer, you must file a 1040X forever. You had to file them in paper format, which was a pain in the neck. The good news is, just announced today by the IRS, you can now submit your 1040Xs electronically. So that is a very good thing for the tax industry. And again, everybody makes mistakes, hence a W-2C, but at least they can now be fixed in an electronic format.
See, I'm going to consider that breaking news. Yet again, Love and Relo, breaking news over here. 1040Xs electronically. Love it. We have time for one more question if anybody wants to ask it. Or, you know what, David, if there's any questions that you have for me or for the audience or anything that you want to leave us with, I'd like to give you the opportunity.
I'm good, Ben. I would just like to ask you, how did you get involved in relocation and doing the gross up item, as you mentioned a month or so ago? How did you end up going down that path?
Well, it all started when it was the only job I could get, was working at Pods in the call center, kind of in a boiler room, trying to book long distance moves over the telephone. And I didn't want to do that job anymore. So I tried to get into management so I didn't have to work. And I finally got a promotion, and I found out I still had to work, and got relocated, from Texas to Florida. And, and then I kind of moved into corporate accounts, and corporate accounts in moving are, RMCs and corporations with relocation programs, and that was kind of my first entree. But I didn't really get involved in the quote unquote relocation world until probably about 2010, I want to say, when I went to my first ERC back when it was the National Relocation Conference, the predecessor to the Americas Relocation, the spring conference. And, just did it. I would think it was the second year they had YP40. I want to say YP40 turns 10 this year. So it was the second year. So it was 2011 in San Antonio, and just fell in love with the people and the parties. And, that was back when they had the Oakwood party was the jam. And I just was like, wow, this is work. Like my sole career, I think my career ambition at that point was to be able to go every year. Like, that was pretty much, if I can just make sure I get a flight to this party every year or twice a year as it was, I must be doing something okay. And the people became, they went from, drinking buddies to friends to mentors to some of my best friends. And that was really the reason why I started Love and Relo and the Gross Up. The Gross Up was me and Tommy talking and just having such a good time and cutting up and thinking, gosh, I wish people could be here for this conversation. I think they'd get a kick out of it. And we talk about anything and everything and just go eat lunch and then turn the camera on. And then I also started saying, well, I love Tommy. That's my buddy. But, how many other people are out there that I have these wonderful relationships to? And so I created Love and Relo, which is a platform for us all to kind of get together, share ideas, share our stories, share some of the insights that we've gained through our experiences, our failures, our successes, our research. And this conversation with you, David, has been eye-opening, insightful as usual. Fantastic stuff. Really, I appreciate it so much.
Oh, that's great. Thanks for your answer. That's a great story. I love it. Nice
Yeah.
job.
Well, there's no shortage of stories in this business, right? You know, you notice that?
Yeah.
Yeah. So, well, anyway, that's, I think that's our show. We did a tight hour. David, you've been phenomenal. I want to go ahead and thank our sponsor here as well. So, let me go ahead and bring that up here. And we're going to thank our sponsor, VIP Corporate Housing. VIP Corporate Housing is the partner you can trust to put the safety and security of your employees front and center in everything you do. In addition to providing some of the best accommodations in top locations, they've added extra cleaning services and precautions to put your minds at ease so you can leave the worrying to them and you can focus on doing your best work. If you ever want to sponsor Love and Reload, get in touch with me, get in touch with super producer Janet in the background there. Let us know if you want to be on and you have really smart stuff to say like David and you say it well. Please let me know. If you got white papers, I always rag on white papers, but I think it's in the way they're presented. So if you want to make your white paper really fun and come on and share some stuff that's really smart and actionable like David has today, please do that. Always looking for new guests as well. And somebody's just commenting that David stole my thunder. I was going to ask you when we are going to flip the script and interview you, Ben. And gosh, I didn't even show up here. I don't know who wrote that. Crystal Abby says, really great session, great insights from David. Thanks, Ben. So thank you so much, everybody. Tomorrow's Friday. That means it is the final round of Global Mobility Jeopardy with Nicole Barilli and myself. We've got some great guests coming on. We've got Brian Keating from Dwellworks. We've got Brittany Harrington from V Suites, and we've got Gary Connerly, who checked in today from Home Services, showing down. Yeah, in the showdown for the championship of Global Mobility Jeopardy. I think you'd be good at that too, David. We should get you.
I enjoy watching it. I really do.
Yeah, awesome. Well, thanks everybody. Have a great day, and thank you, David.